Hey there, it's Sam from TradeDevils.com, and today I'd like to introduce you to the new Trade Devils price action indicator. Now, this is a relatively simple concept, first introduced by Al Brooks, who many will tell you is the godfather of price action trading. Now, Al is a very prolific writer, a great trader. He's written a number of books on price action trading, and if any of you that are interested in price action trading, perhaps you've been exposed to some of his content. It's very dense, and there's a lot of it, and there's a complexity to it. I think many people have struggled to turn all of that information into actionable ideas in the market. Now, one of his students, we think, really took much of what Al has written about and synthesized it down to what we believe is the most profitable pattern that replicates throughout the day in all markets. And this is what we've done here in designing this indicator. Now, the trader I'm talking about here, and many of you may have been exposed to some of his work, and nobody knows his full name, but he goes by the handle of Mac, and he's over at Price Action Trading Systems. Now, he teaches the same approach here that we're going to show you here via the software. He's doing it by eye and by hand, and based on many years of experience, has a very loyal following, and he's a very successful trader. But in that same spirit, we found that implementing this on the fly without many years of experience can be challenging. So we decided to write some software code here that would be an assist to any price action traders that were implementing this strategy. So let me show you the pattern. It's deceptively simple, and I think that's a bit why people struggle with it at first, because it's something you have to keep track of as the market is moving throughout the course of the day. So let me just first show you the simple pattern. At its core, if we have a trend that's moving, we're looking for just a pullback within that trend. So it would be swing, and then we're looking for a two-legged pullback and then continuation of that trend. Now, you might look at that and say, well, that's very common, whether you're thinking of this with regards to perhaps an Elliott Wave correction, where you'd have an ABC correction, or just a simple measured move where you've got A to B equals C to D, or as many of you that have been exposed to some of my teaching or some of the content that we post over on YouTube, you might be more used to something like this that we get that stop right there. So you might have seen this pattern here that we talk about as the dominant algorithm in the market, and by no means am I suggesting that that has changed. This is still very much the dominant algorithm in the market. This is another pattern that can be found in the midst of this larger pattern that's happening throughout the course of the day. So it's simply a way to augment what you're already doing. So you might, if we're implementing this here, this little pattern might be something that you'd find here. So let me put it in the context here of how you'd apply this particular approach to it. This similar concept that it's a three-legged retracement, or you might think of it as a two-legged swing, as in we've got a swing, one swing in one direction. These would be counter trend. We've got a swing in this direction, and this is the opportunity here. So the first swing would be first entry. The second part of that swing would be second entry. So that's the language that you'll see in the abbreviation. So let me show you the pattern here in the market here, and perhaps some of this will start to make sense here, and we move off of stick figures. So this is a particularly good example. Now, here, I'm just using the last 5 days of data. I'm recording this on Sunday, the 1st of November, and here I'll just show you here. I'm just using the last 5 days of data. So there's no cherry picking of particularly good period stretches of the market. I'm just using the most recent 5 days that we've got. There's no need to cherry pick with this. This pattern, as you can see here, is happening hundreds of times across. On this, I've got a 2,000 tick chart here over the last 5 days of the market. So you can see hundreds and hundreds of times this pattern appears. So let me back over here, and let's just take a look here so we can get a visual representation of the pattern. So let me just zoom in here, because this is a good example where it's actually showing itself both a buy and a sell. So what your eye might be most used to is this kind of a pattern right there. Right, so if I just take that off, so a simple A to B equals whether it's an ABC, let's just call it that, right? ABC. So we've got a swing, we've got a pullback, we've got another swing that creates the potential potential. It's just that, the possibility here that if we get a reversal here, if we start to push back the other direction, that we carry on with the larger trend. All right, so let me pull that off. Now let me show you that what you'll see here, we have a sell setup, but we also have a buy setup. So the buy setup is the one I just drew for you. It's a swing, retrace, swing. Here's the opportunity. But we also have it on the sell side. So here we're starting here, and we denote the start of it here with the zeros and the ones. So at the zero here, here's the first swing low that I'm pulling from. So I've got a swing up, I've got a pullback, and I've got a secondary swing. Now you'll note here that unlike the other one, there's no requirement that we go beyond this pivot. It's a swing, pullback, swing, and if this starts to fade and go the other direction, the opportunity would be right here to enter that market looking for a short. Now, it could be a trend change, could be just a short-term little reaction, but there's an opportunity there per this pattern. So let me show you a few other examples here where it's perhaps not quite so obvious, and you'll see the benefits of having software do this for you. So here's a couple right here, and just to try and show you the different ways that this presents itself. So here's one that would be a little bit trickier to spot. So here's the swing, the retrace, and the secondary swing right there. So here's the pattern. It's going to look a little different here. But you've got a swing, pullback, swing. If we get a reaction there, right, if we get some sort of reaction going back the other direction, there's an opportunity there for a little reaction, a counter trend, whether it could be a true trend reversal or just a scalp. We're looking for a reaction there. So there's the first one. It's a little bit deceptive to the eye. Now here's another one. From here, here's the zero. So we just go up to the one. Well, pardon me. So here we've got a buy and a sell here. So so it would be this way. So it would be from this swing low. We've got a swing, a pullback here. That's the one. So this would be first entry. Here's second entry. Right? So in this example here, you get your more typical where we get a swing internal and then we break that high, we get an external. It's the more typical ABC kind of a correction, but it's setting up a potential sell here. So here you're only going to get, it looks like you'd only get, maybe 4 or 5 ticks. Well, you got 10 ticks here from the entry bar. We'll go over that in a second. Let me just a couple other quick spots here where again, it's a little bit tricky to spot it. This is the benefit of having software do it for you. So I've got a swing, I've got a retrace, I've got another swing here. As we start to push back this direction, there's an opportunity there. Here's a couple of cells here, just a few more, just so you can see the pattern. Swing, retrace. Now I have a higher low. Now I go up, now I get my secondary push here, creates the opportunity, comes back down. Now this carries on because I get another setup here. So this is swing, pullback, swing. Right, so it creates the opportunity. So you see the opportunity here, the sell opportunity here, buy opportunity here. So this is, not what we're just as you've perhaps gotten used to is something like that, right? Same pattern, swing, pullback, swing, two-legged swing, but just the advantage here. Here's another one that would have been a little bit tricky for you to spot, right? So if you're over here on the hard red edge of the market, are you seeing that there's a pullback there? Well, this is the advantage of letting software do it for you. Swing, pullback, swing, right? So if I stop it right there, right? So there's the pattern. Two-legged pattern creates the potential for a reversal, and in this case, you get a very nice trade out of that. All right, so hopefully that gives you some insight into the pattern. Now it's happening, again, as I said, hundreds of times, in this case through a 2,000 tick chart here. If you went to a 512, it'd be even more. But this is a commonly used tick chart size for the S&P. It lends itself very well. Those of you familiar with Mac's work know that he uses a 2,000 tick chart. Actually, I use a 2097, but they would be almost identical, but I'm just kind of a fib junkie, so I use the closest fib number. The only other thing I have on here is a 21-period EMA, and then I have the initial balance, our initial balance indicator, just to help frame the day so we can see the start of trading. And then I'll side note here, if you're not using the initial balance, you need to be using it. As I've said many times, with the addition of VWAP here, the IB high and low and VWAP, those are the three most important numbers on the playing field every day. You have to know where they are because algorithms are tied to them. So that said here, now let me just show you a few other things with regards to the indicator. So here's our 21-period EMA that's just running on this, and that's the only thing that we can use it to help identify trend direction here. So now what I want to do here is look into the parameters of this indicator here. So let me just bring that up here, and we'll focus on some of the options that we have in terms of setup here. So let me pull this off to this. Let's do it Can I do it this way? Here, let's do it. All right, we'll do it this way. So you can see over here. Now, one choice that I have here in our parameters, I can have it show me the higher highs and higher lows. So if I apply that, so now, and this push this up. This can be helpful when you're first getting used to price action trading. It's very important to know, do I have a lower low, higher low, just so you don't get confused about the short-term trend direction. Now, as the more experience you get, you won't need this as much as you might when you're first learning this, but we offer it just for those of you that might prefer it. I choose not to have it show because it just gets a little crowded on the chart, so I prefer not to have that show. The other thing we'll give you is a congestion filter here, so if we get little areas here where we have congestion, one of the choices for you is to kind of remove that area as potentially a lower probability area for this trade to execute. I don't use them, but it's an option there if you're trying to be as conservative as you possibly can be. So let me go over a few of the other parameters here that we have to choose from. Okay, so I'm going to take the congestion boxes off. So we have a few others. Now, additionally to this, I definitely want to show the zeros and the ones, particularly as you're learning this, because the software is going to keep track of the last pivot low so that you know where to start your count from. Right? That's a huge benefit of letting software do this. So you're not wondering, well, do I start it here? Do I start it here? Hugely beneficial to have it doing that. So particularly when you're first learning to implement this, you absolutely want the zeros and ones so you can track where the next setup is. All right, so you definitely want to have that on, my advice, when you're first learning this. Then we have whether I want to show a stop loss and a take profit. We have a bar timer here. We're going to get to these middle bits in a second here because these are filters that we'll look at. I definitely want to show trades. And then here we have some parameters with regards to execution and the P&L of implementing this strategy. So I want to see a stop loss and I want to take profit target. I want target of ticks. Now this is variable. You can set this. I have this currently set for demonstration purposes with an initial target of 4 ticks. Now, this strategy is ideally suited to 2-lot or greater trading, so that we can have an initial target and then a runner for the potential for a bigger move. So the first target being 4 ticks in the S&P, right? You're getting your 4 ticks, your $50, and then we have the expectation that you're going to use an ATM here that will manage your second, let's just use a 2-lot contract here for demonstration purposes, so that your ATM is going to move your stop to your entry price or break even upon achieving your first target of 4 ticks. So your ATM would be set at 5 ticks so that you know you got your fill, so you're guaranteed the fill rather than a touch no fill. So the ATM would be set at 5 ticks to have your trailing runner contract move to your entry price or break even. Now, in the statistics that what I'm going to show you, we're not including any slippage parameter here or any commission parameter. We'll probably include that in the next version here, but it won't ultimately matter here. These will be guidelines here, and you'll see what I mean in a second. Now, just to carry on down here, I have the ability to set a max stop loss here. Now, I'm going to leave this fairly high at 24, again, for demonstration purposes. Now, that's higher than most people would use. I typically won't use a 24. I would typically be using a 16. But I'm going to use it at 24 here for demonstration purposes so that I can show you the most number of trades. You could disable this by setting this to 100, and it's going to take every trade. But we wanted to give you the ability to limit the amount of risk on any given trade by being able to set this to your risk tolerance, account size, whatever is appropriate for you. For demonstration purposes, I'm going to keep this at 24. Okay, so then just additional parameters here. We give you the feature here to show support and resistance, and you can set the strength, level, or number of lines of support and resistance that you'd like to see. Now, it actually won't show here because the markets are closed as I'm recording this on Sunday the 1st. But when the markets are open, because it will use real-time data and the pivots that are most recent, and it'll give you, well, you can set the swing strength and then the number of lines. So I have it set at 6, so it would show me 3 above and 3 below for support and resistance, and then whether you wanted it set based it off of time or ticks or however you'd want this. So you've got all of these choices in terms of what you're using. I will typically use either a 5 or a 15-minute, depending on how volatile the market is on any given day. But that's a nice feature that's built into this. You have an alert, so whenever we have a setup bar that's forming, you'll get an alert, so you're not going to miss it. And then here we have our statistics, so we can track the P&L of this strategy over any given period of time. So again, here this is just going to be 5 days because I have 5 days of data loaded. So here, there's nothing here that would be relevant to what we're going to show today. So for here, I definitely want to have it show my statistics so that just to recap here, we've got a 4-tick first target for our 2-lot trading. We've got a max loss of 24 ticks, and we are going to have it show us our stop loss and our take profit. Okay, so let me apply that, and you'll see now what the software is going to show us. So what we see up here in the, if I bring this down here so you can see, get that up here, you can see it a little better. Okay, so over the last 5 days, if you took every one of these trades mechanically, and the assumption being no slippage, right? Again, it's a perfect entry, so no slippage on your entry, no slippage on your exit. So we don't want to lean too heavily into these numbers because we know there's going to be slippage on entry and exit and then commission costs. So this is a guideline, but for the sake of demonstration, let's just carry on. As I said, likely we'll build that into the next version so that if you wanted to get a more accurate representation up here, you might use a 2-tick slip on entry and exit, and then whatever your commission costs are. Again, it ultimately doesn't matter, but I'll show you what I mean when I say that. So here we go. So over the last 5 days, if I took every one of these trades with those following parameters and caveats that I've just gone over, we'd had 173 trades, 119 winners, 54 losers, win ratio of 68.79, and here's our P&L. So I've got 19,137 on wins, 18,750 on losers. So you might look at that and go, okay, well, it's profitable. It's profitable, but that's not getting anybody overly excited based on that P&L over 5 days. Well, let's take a look and see if we can improve that result. So a few of the things that we've built into this. Now let me go back to my parameters, and what I'm going to do now is focus here on these 2 filters. So the first thing that I want to focus on is to only show trades at key entry points. So I'm going to click that on and hit apply. Right, now note we have no trades, right? Because I haven't identified to the software where those key entry points are. So how do we define key entry points? I know that's what you're asking yourself. Well, we do it, and for those of you that have seen either Al Brooks' work or Mac's work over at Price Action Trading Systems, will recognize that we define these based on either trend lines or channels that are being defined by the price action. So let me give you just an easy example here. So this last ramp up in the day. So if I'm just using my channel tool. Now, when we're drawing a channel, we want to get as many touches as we possibly can. So you see here, I'm getting 2 touches now here because I've got to touch the price action at least twice to define the channel. So in this particular case, so as I've drawn these now, it's showing me, note I'm only going over this little section here, it's showing me the 2 trades that are there based on this channel. So as you note up here, now I have 2 trades, 2 winners, no losers, and based on those 2 trades, I've got a profit of $725. Again, now let me just zoom in here. So you follow along here. So here's the pattern, right? And we looked at this. I drew it up earlier. So here's the swing. Pardon me. Get this back here. So here's the swing. Here's the retrace. Here's the second swing, right? So this is the pattern being set up. So here where you see this red arrow, this becomes the signal bar, the setup bar, if you will. Now in real time, if this if we hit this point prior to this bar being triggered, a red dot will appear here to identify this as the setup bar. The entry criterion is a break of 1 tick of the setup bar, which, refresh your memory here, is set over here in the parameters right here. So we've got our stop loss parameters and our entry parameters and our target of 4 ticks. So the stop is 1 tick. So well, let me back up. As we're coming down, it's 1 tick below the signal bar gets me my entry. So I'm now short the market. First target is 5 ticks, which goes out right here. Second target is this is the runner that continues to stay short until we get a break of the trailing bar's pivot high or low. So in this case, since it's a short, as we go down, 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 this is the first bar. Oh, excuse me, pardon me. This is the first bar that takes out the pivot high of any of the trailing bars. So here's the bar that gives us the pivot. Once that's broken, we're out here. So we got 4 ticks here, $50, and then we get a total here of $462.50 with the remainder coming out on that exit here. Again, this is assuming no slippage, right? So it's a perfect execution. But as we sit here on this trade where you got $462.50, so take off $62.50 if you want to be ultra conservative to allow for slippage and commissions. You got yourself a $400 winner. Right now over here, similar concept. I'm coming back up. Here's the let me draw it again. So here's the swing. So we're going up, pull back, up, right? Pardon me, I drew it the wrong way. Right, so it's swing, retrace, swing. Here's the entry. So on the break of this pivot high, we're long the market. We got a 4-tick target for the first one, or $50. So that goes out here, and then if I zoom in here, you'll see the same phenomenon. Here, the runner is going up, and up until the low of this bar here, and you can see, right? We had more there, but it's not taken out until we break out the low of this bar, which goes out right here. All right, so the total here is $262.50, $50 from the first target, and then the runner goes out here. So now, thus, a total of 2 trades thus far, $725 with perfect execution and no commission. Right, so round it down, call it $675 if you want to be ultra conservative. Right, so still good afternoon here. So let me pull back out here, and we'll look at a few other examples. So now that you see what I'm doing with regards to identifying, well, maybe I'll give you a few other examples here. Identifying key entry levels, right? It's always tied to a channel. Let's see if I can find yet another one here that's just obvious. All right, so let's try here. Did I get anything on this side? So I've got one little cell here. That's a $50, so essentially that's a scratch. So I got nothing there. Let's just come down. Oh, I got one here. So I got 2 here. So it looks like it's 50 and 87.50 here. So you can see here now in my P&L, I've got 5 trades. No losers yet. We'll find some losers, trust me. $912.50 based on just what we've drawn so far. So I'm just going to keep going here, and then we'll kind of put this together. Right. So here's another one. Right. So wait, pardon me. I got a loser in there. All right. So now I've had. Did I get that? Yeah. There we go. So I've had 6 trades, 5 winners, 1 loser. So I had 1 loser of $375 here. This one's a loser. Here's another winner. So I'm at a total of, well, I'm about $1,000. Well, just under $1,000. So I have $1,325 of winners, $375 of losers. Now this phenomenon just carries on, right, as the day progresses, right? Whoop. Get that over here, right? So because here I want to get that, I want to touch this channel, and I want to touch this. So coming down here, here's the entry. So let me zoom in there just to review this one more time, so you start to get the hang of it. All right, so now here's the pattern coming down. So here's the 0, here's the swing, the retrace, here's the second leg, here's second entry long. So break of this pivot by 1 tick, we go long. Here's the first scalp target, 4 ticks. Right, and here the runner goes out at the break of that pivot low. So now I've had 9 trades, 7 winners, 2 losers. I'm sitting at 1,800 in wins, 700 in losers, so 1,100 in profit, and I'm just working through the back half of this day. Now let me go over to another chart where I have the entire day done. So we'll come over here and kind of make this example for us. Okay, so now I've gone through the entire day and drawn these up. So a few things to draw your attention to. All right, so I'm starting from assuming maybe you're in Europe and you're trading the pre-market here. So coming up, right, you'll see it. This is firing only at these key levels, and key levels again being defined by where the channel's drawn. Right, so can I get 2 touches? So you almost never are going to get, oh, this is a great example right here. You're almost never going to get the first part of the channel, because remember the market has to be moving. So we need the market moving this direction. It's the little correction on the way. So we get this, right? That's the trade we're looking for to carry on in that trade. Or in that trend, I should say. So that's why this is a particularly good one, because you can see it here. We go up, then we get this little counter trend here, and then we go up. So if I pull that out, try it again. Sometimes that gets sticky. So here's the swing. Now I've got a little counter trend 3 here, and then we carry on up here. All right, so let me pull this out. So, right, as we were trying to describe it. So there's a perfect example of it. Swing, I get my little ABC, if you want to think of it that way, little ABC, and then we carry on in the trend. But note here at the top of the trend, if I had the pattern here, this would have been a potential sell. But this is where we get the entry here, because I got that little 3-wave correction. Well, let me zoom in there so you can see it. Right, so here's the pattern. Right, it's swing, retrace, swing. All right, there's the conditions for entry. On the break of the high of this bar, I go long. Now in this case, I only get my scalp target, because remember, the ATM is assuming that you're moving your stop to break even when the scalp gets filled. So you're out here at break even, so you're only getting 50 on this one. Same here. I've got a sell. It goes out here. I get my scalp of 50, but then I'm out at entry price at break even. Right, again, assuming 0 slippage. But just a good example of putting into context what I was trying to show you of that example, and just using the market here, you can see what I was trying to get at through kind of that line drawing here. The longer degree trend is right here, and in the midst of that, I get that little 3-wave, and the opportunity is right here, right, to carry on in that in the direction of that trend. So if I pull all of this off here, get rid of that, let's get rid of that. And just start from the beginning, right? So every trade here where I've got 2 touches of the channel, you can see the trade is firing, right? So now I can do this with the benefit of hindsight, but of course when the day is starting, right, we use another day. You know, you don't know what's happening here, so you're drawing the channels based on the initial information that you have. So if you were right here, I mean, you've got this touch, and this touch, right? So you got nothing there. So then you got to, well, let's pull it. We got to pull it a little bit further. So once you've got a few of these, hang on. Once I get going here, then I can see now I've got a better trend here. So now when I'm touching this, I can see that here when I break here, well, here I get a winner and a loser. Right, so it was not particularly good right here. So here, well, you're still way ahead. But the point being that it's what's triggering the trade is touching of the channel. Now, because let's see, we go up here. You want to draw these fairly skinny. So if I come from here, come on, there we go. Thank you, Ninja. Okay, so right here, right. So I've got a little. This is a loser here. Now, well, that's a good example here. So I've got a couple of small losers here when the market is rallying higher. So one option that we built into this for you, that it would be consistent with the way it's taught, either from Mac or from Al Brooks, is to only trade in the direction of the trend. So we give you that option. Now there are times where you might see something set up where it's such a clear setup, so that you would want to take the trend regardless of take the trade regardless of whether it's in the direction of the shorter term trend. Now here's a good example. I'm just kind of identifying right here. So here we've got a swing. You got to tick through the golden zone. But the idea being here, I've got a swing, I've got a pullback, and then I get my more traditional measured move pattern here. So as to whether or not there would be a setup in this, you'd want to be here. Right, so you've got a winner here, you've got a winner here, but is there something right here? Because this would be, if I go this direction, and get all of that, And I've got those two as well. So this being counter trend, here you actually did get it here. So here's a perfect setup. Perfect setup where we're kind of combining these ideas. All right, so here's the pattern going right into that golden zone, even though we get a little sloppy. We've got it looks like a one-tick break here, likely some stop running. So here we get the pattern. It's a little tricky to see it. Get this hot. So it's one. There's the swing, there's the retrace, here's the second swing, right? So get that right there. So it's small. Not going to let me pull it out. There it is, right? Very small, right? That might have been hard to spot that unless you were looking for it. You trained your eye to look for that. Fortunately, the software is doing it for you. So the opportunity is down here at the pivot low where we get the potential for that reaction. Drawing very well today, but here's the entry at the break of this bar. We go long, right? We get our 4 ticks, and then we get stopped out. The runner gets stopped out, so you get 62.50 on that one. But now we got the same thing coming back the other direction. Now here I get a beautiful trade where I've had here's the second entry sell up here. Let me draw. This is probably getting a little hard to see, but let me just draw this for you. So here's the 0. Here we go up. Pull back, we go up again. Now if it breaks the low of that bar, I want to be short, so here I go short. Here's the $50 4 tick first target going out. Here's the runner going out, so we end up with 512.50 on this particular trade. So just looking as I've drawn this, just using the key entry locations tied to the geometry or the channels, or it could be trend lines as well. Now we're looking pretty good. Now we've got total wins of 5,362, total losers of 1,650. So we're pushing $4,000 in profit, and we're just on one day. And now we're using the full day. Oh, pardon me. We've got a little bit of the prior day. So we've got the last half of Thursday and all of Friday. Now let me show you a few other things here just to clear some of this up here. So let me get this off. All right, so let me reset here. How am I doing on time? Okay, we're at 30 minutes here. I was trying to keep it under 30. All right, now let me show you a few other features, and then ultimately what I can tell you is that this is going to be much more powerful when you're working with this on your own chart. It's going to take a little time to get comfortable with what we're actually seeing here. So I'm going to take everything off the chart. These little swings, like here's another, just a perfect example, right? So we get just your eye will eventually get to where you see this. So we've got a swing. Now we get just a perfect little three-legged, or well, ABC. I always think in ABCs, right? So I've got a perfect little two-legged swing. I always think of it as an A, B, C, just from so many years as an Elliott Wave trader. But in the context of price action, it's a two-legged swing, which creates the second entry short right here. Now, if you have been trading this for 20 years like Mac has, you might get to the point and say, okay, well, I can see two of them right here. I can see one right here, right? There's a little, if I take this one off, right? There's a little three-legged trade. Here's a scalp here. It's immediately followed by another one, right? Little three-legged swing right there. So I get them back to back. Well, then you can just eventually, now your eye is going to start spotting these all over the place, right? You got another one there. Right? Do another one here. You'll get to where they'll just be, that's all you're going to see is three-legged swings, right? Because you know that's creating the opportunity. What we're doing with the software is just making it that much easier for you. So there's no chance that you're going to miss that, because we're going to have the 0, the 1, the 2. We're going to have the signal bar and then the entry bar if it's filled, right? Your discretion as to whether or not you want to take the trade, and then what you want to do with regards to stop size. So here, that's a good example. Now I've just drawn this up, so the software is going to register it, but you wouldn't get it here. You wouldn't have drawn this channel yet. You'd be working from this channel. So if I bring it down this way, it's actually tied there. I can get that to fire. There we go. Okay, so it's this channel that it's responding to. So you see the channel is actually, it's here. This is the trade. It's swing, retrace, swing. That's the signal bar. Here's the entry. That's what gets that trade. Not the one that I drew right here just going that direction. When I draw this one here, right, this one, it's a different trade, because you wouldn't have drawn this that direction, but you would have drawn this one. Now, that's what I mean by this will become infinitely more powerful as you start doing just what I'm doing, is working through these and understanding it and seeing it, and then recognizing how the channel draw is dictating whether or not you want to take the trade based on the trend direction, or whether you're doing something that's counter trend, or you're looking for something in a larger pattern that might look more like that, where here's the swing, here's the counter trend, come down here. Now I get a channel within a channel that sets up this trade right here. So just looking at the little trades that are right here, that's 3 trades, all winners, sitting at 612.50, assuming no slippage and commission, right? So round that down by $50 again to be conservative. Right? You can see here's a nice little section. Right? Very simple. There's no, this is not rocket science. This is a very simple concept based on the fact that the market likes to move in twos. One other thing to show you. Okay, let me take everything off of that here and then we'll wrap up. Ooh, this went long. Okay, so let me get off to the hard right edge. Now there's another filter that we have in here that's important. So we just looked at the filter where I'm only showing trades at key entry points, i.e. it must have hit the channel to be defined as a key entry point. Well, now additionally, I can tell it to ignore counter trend trades. Right? So this would be another filter, the more conservative approach. Right? So we're going to hit apply. Now it's going to operate and it's going to dictate the trades based on the direction of the channel or the trend line that I draw. So let me find, I think this was good over here. Okay, so if I use this channel tool and I start drawing up this direct, well, there's one there, but it's based on the channel that's coming down here. So let's do it this way. All right, so there. So it's only going in direction of the trend. Let's see if I can get this to fire over here as well. All right, so this one, it's actually not a great example because the software is identifying it here, and that's a huge winner. But you wouldn't have that channel drawn that way, and it's right at the open. So let's not use that example because it's not realistic for what you wouldn't have that channel drawn as it is right there. All right, and you're likely not trading right at the open of the 24-hour session. Okay, so let's pull back up here, see if I can get something. Here I got nothing, right? So again, I've got this is a very strong filter. I get that right there. I've got a little one here since the trend is going up. Now, the other thing that I have on here, I just draw your attention to it here. Let me take this off. Is that now I'm using a 21 period McGinley line, which I prefer to an EMA. They're going to be very close, but because it's color coded, so I can look here and say, all right, well, which way is the trend? Right? It's a bit of a dummy filter, right? So if you're not sure which way the trend is, the color coding of the McGinley line is going to help you out there. And it could be that you're using the higher highs and the higher lows to determine where's the trend right now. Do I have higher highs and higher lows going on here? So is this an uptrend? Well, you know, at this point here, are you sure? Right? Because here's a high, here's a low. Right? Is that potentially could be a lower high, but right once we get a higher high, right now we know we've got a trend. So my point being that this is all just designed to help you identify into how you're going to draw your channels or your trend lines. So let me take that off. We could just use the color of the McGinley line as a quick reference guide. Okay, so with that set, now let me draw here. Let's see if I can find something right here. All right, so it's filtering. Since I get 2 hits here and the trend is going up, it's going to show me that trade. So it's a perfect little example of it at a smaller degree, a little harder to see. So I get a swing. So think about that structure that I drew, right? Which is we've got a trend and then we're looking for this little pattern in the middle of it. Right, we're looking for a 2-legged, right? I think ABC correction in the middle of that. Well, here it is in perfect shape, perfect form. Right. So if I draw it in, here's swing, here's swing, swing, 2-legged. Now, why are we over here? Because this is the first low here that starts to go back the other direction. Here's my entry, 1 tick above that. Now I'm in. Right, first one goes out here at +4 ticks. Here's the runner going out as it breaks the pivot low of that. All right, so I get 312.50. So 1 trade thus far, 312.50. All right, now let's see if here, let's go over to a different day here. We've done a lot on Friday. Let's go. This ought to work here. Big up and then big sell off on the end of the day. Let's see if I can find a few in here. Okay, so I'm going to use the channel first, and then I'm going to switch. So do I have anything in that trend? I do not see. Yep, there I got one there. Okay, so swing. I've got a touch of this channel line, and I get a $50. Well, essentially those are, you might even just call those a scratch, right? But you're not gonna lose money there. Nothing there. So let's go up the direction here. So I get one right there. Okay, so far I've had 4 trades. So look here, just in this little section, 4 trades, all winners. 81 ticks, 1,112, no losers. Right, deceptive, right? These are nice little hits. Okay, let me just keep going. Now, here, let's see if I can do it. Right, we got that one. Remember, it's it's filtering for trend direction. Here, I get 2 back-to-back losers, so it's good. I want you to see some losers because losers are part of it. It's part of trading. See, look, I've got something here as well. I've got nothing in that one. Maybe something on the big one on the way up. Let me draw that differently. You want to stay right to the market here, so I'd probably do it that way. Nothing on that. So again, there likely are setups in there, but it's nothing that's set up in the direction of that trend. And I get this. Looks like I've got a little counter trend here, so I might go that direction as well. Nothing there. Again, this is a strong filter. So there, I've got this one. Right, so I've got this one here. So now I get another trade. So this one ends up 237.50. If I zoom in there, you can see what we did. Let's just show you the pattern one more time. So the trend is we're coming down. We've got lower highs and lower lows. Now I get my 3-wave correction. Right, here's the swing 1, pullback, swing 2. Right, now we get up here. This is actually becomes my signal bar. I go higher here, but it doesn't matter because what I'm looking for is the break of the low. Now I break the low here. The first target, 4 ticks, goes out. Second target goes out here with the break of this bar right here on that break. So I get 237.50, add commission and slippage. Maybe it's just 200. So I'm sitting over here. I'm now I've had 8 trades, 5 winners, 3 losers, 825 in losers, so I'm only 450 up. All right, using this filter. Let me just keep going here, and then we'll wrap it up here. See if I can get you a couple other good examples. This should be good here because we can do the same thing with a trend line, right? So since we're only filtering the direction of the trend, I could just use a trend line. I don't have to use a channel. So some people might say, I don't want to use a channel. Where did you go? There it is right there. So tag. So those are the 2 pivots that it's tagging. I got a $50 scalp there. Now here's a section where we're essentially going flat. Now when we're in a section that's flat, if there are any setups there, it'll take sells at the top of the channel, buys at the bottom of the channel. There was a good one here that I was trying to show you, but that one's not going to get, well, there I've got a little one here. I've got this little one here, which is that scalp we got here. How we doing here? So we're at 13 minus 825, and then towards the end of the day, let's see if I got, yep, I got a couple there. Here, so now I'm looking better. I'm up to 1762 because I got 2 back-to-back winners here. If I come down this way, I get another winner there. So now I'm at 2275 winners, 825 losers. Get a little one here. We'll probably use a trend line here. So you can see, because it's a trend line here, I'm drawing it up when we get that break. So that's a $100 winner. So just again, hopefully that gives you enough examples. Again, there will be nothing more impactful than getting this on your own machine, your own version of Ninja, applying the indicator, and then working through these, and then recognizing how significantly powerful this technique can be. So just looking at what we've done here, right? That's not a bad couple of days. Now, I say that nothing is more powerful, and you're like, well, great. So can I try this? Absolutely. We have a 5-day demo of all of our indicators. So you simply have to request it, right? Send us an email, let us know that you're interested. So we will send you not only this indicator, but when you buy any, or when you're interested in any of our indicators. So you might say, hey, I'm interested in that price action indicator. Well, in addition to that, we're going to send you a file that includes every single one of our indicators. So well, it's like 42 indicators that are in here. Every one of our custom designed indicators is going to come with that demo that you'll be able to try all of these free of charge for 5 days. Now, some you might understand how to use, some you may not. Some will be familiar. It might be, an initial balance or a fractal or the Donchian channel or some of the things that you would recognize that it's just our version of those. Some of them you may not understand how to use and the value that they're adding without some education and training on it, but you're going to have the opportunity to apply any and all of these for 5 days free of charge. So this one I think will take a little time just to get used to understand what it's showing you and how to use it and what kind of filters you want to put on it. As I showed you, there's a lot of flexibility with regards to how much you want to filter the trades in terms of key levels, with trend, counter trend. Those are all options that are available to the individual trader. All right, so if you're interested in this, just let us know. We'll be happy to offer you that trial that will in fact, we'll give you all of our indicators, but certainly you'll get 5 days of unrestricted use of this indicator. We think you'll be very pleased with it. You can trade to your heart's content. I'd suggest you start in a sim account. But if you get comfortable within those 5 days, well, you have a good day. You'll pay for this in short order. It's been very profitable for us, very profitable for those that have implemented it and are using it with intelligence, right? We don't want to take every single trade, right? Not every trade is as good as the last trade, as I showed you when we had it set to take every single trade. Much better results if you use it as it's intended to be used, right? So draw your trends or your trend lines or your channels, trade with the trend, be responsible about the stop management, and you're going to do very, very well with this indicator. Okay, there you go. That's long enough. Hope that helps. Reach out if you have questions. Let us know if you're interested in the demo or if you'd like to just jump on it while it's hot. Okay, guys, there you go. Talk to you later.